Right, today we will be doing the weekly forecasting, right, on everything. So let's have a look at Euro USD. And no, maybe we'll start with dollar index. That's better. Dollar index. So weekly, what can we see? Let me take out this indicator. What can we see on the weekly? Weekly, we have the daily IBDR high remains as it is. We have premium discount. We have premium discount. Prices trading inside equilibrium at the moment. So if it's trading at equilibrium at the moment, then we should see price trying to go to a discount PDRA and then go higher. So keeping all this as it is, what can we see? We can see that again. Obviously, we can see that price.
Là
Uh, we can see that price is like I just said, equilibrium, right? So what else can we see? We can see that there's a bullish order block over here, and price is trading right below it. Price trade right below it, and so when price is passing through significant PD areas, that means that there's a change in the state of delivery. Okay, so weekly time frame, we want to see price, slowly but steadily go lower into this fair value gap, right? Into this fair value gap. So let's just do all this again. We have fair value gap high, the fair value gap low. Okay, so we call this the premium FVG, and we have the discount. Okay, this is the plus FVG, other one is the minus FVG, right? Minus FVG. If anyone has any questions, feel free to ask, right? So we have the plus discount fair value gap and premium of the fair value gap. So it is a range in and of itself. What do we have after that? We have this down close candle here, down close candle over here, right? Which for now we don't look at it as anything. Okay, so our focus is on fair value gap fill. So if price comes down into the pre, we should be seeing some form of sensitivity. If not, it should come all the way down here or to the midpoint of the fair value gap with some form of sensitivity. Now, sensitivity to what point? Sensitivity to the upside. Okay, meaning some form of dollar strength for a bit before it potentially goes all the way down. Okay, now do we have any indication of low resistance liquidity? Can we see any indication of low resistance liquidity? Yeah, from this daily IBDR low to this low over here. Okay, so that is a long-term objective for the dollar to go down over here if obviously the fundamentals point dollar to this point over here. Now in the short run, obviously the fundamentals don't mean shit, but in the long run it depends on central bank decisions and all of that, because at the end of the day it is the central bank that controls price. Okay, so that's that for the weekly time frame. Let's go to the daily. So on the daily chart, what can we see? We can see that price has filled in a volume imbalance, and upon filling in a volume imbalance, where did it go to? It went up into the upper half of the bearish order block, and then it went down. So our forecast for last week panned out perfectly. Okay, we said that we want to see this low get taken out, ultimately this low as well. So what do we have over here? We have the weekly fair value gap, and inside of this fair value gap, what seems to be our drawn liquidity? So can someone tell me what seems to be our drawn liquidity? What is this? Anyone? Someone? Anyone? Yeah, so we have the volume imbalance over here, right here. Okay, so we have the premium of the volume imbalance, and then we have the discount of the volume imbalance. Okay, so we have the premium volume imbalance and discount of the volume imbalance. So what could be our drawn liquidity for next week? It could be this volume imbalance, and price could then try to trade towards this balanced price range over here. Okay, this balanced price range over here, and then ultimately, because this is a low resistance signature, or this is a signature of low resistance liquidity, we could see price, dropping, retracing, dropping, ultimately taking out this daily IBDR low. All right, you see price taking out this daily IBDR low, but we don't care about all that right now. We want to look at the most obvious target. So our obvious target would be fair value gap high, fair value gap low, and the most immediate target of the volume imbalance. So when the dollar index trades to these levels on the daily chart, we could expect some form of sensitivity, especially after it has taken this low over here. Why is this low significant? Stop hunt up. What's this low? Someone? What's this low called then? Yeah, strong low. So when a strong low gets taken out, where will price trade into? A PD array. So here's your most immediate PD array. Okay, here's your most immediate PD array, and we should see some form of low resistance liquidity run, not all the way up, but at any liquidity that has been created on the dollar index as it's coming down. The most obvious ones. Okay, the most obvious ones. So that's all we have. We have for the dollar index. Do we have anything else? No, right? So we can just label this low resistance signature over here, right? And so this should be your ultimate drawn liquidity, if I am right. Okay, there we go. Now, what about any potential, right? Any potential PD arrays over here. Now we have a range over here as well, right? This is your IBDR high, and for now this is your IBDR low. For now, okay, for now this is your IBDR low. So inside of this range, what do you think we can take a look at? Just for a potential reactionary point, we could look at this breaker, which price is actually mitigating right now. But if it goes all the way up there, that would indicate that the entire advance that Euro USD made, it's going to get erased completely, right? But now this reaction over here, shows a change in the state of delivery, right? This over here shows a change in the state of delivery from bullish to bearish. Okay, from bullish to bearish. So the obvious point in which there was a change in the state of delivery is somewhere over here. Okay, somewhere over here, making this point over here to here. Okay, yes, you're right, from here to here. So we should be seeing some form of sensitivity from this point here to over here. Now why am I looking at this point? Because this is delivered rebalance. Okay, redelivered rebalance. So if price is going to go up there, redelivered rebalance, we should expect some form of sensitivity from here to the downside towards our drawn liquidity, which is the volume imbalance for now, or at least for the week. Okay, so that's all with the dollar index. Let's have a look at here. Okay, euro, take everything out, not required. I think it's not, yeah, it's not required. Go to the weekly. Okay, on the weekly, what is the range that we are working within? That's the question, right? So over here we have this IBDR range high, and then we have this IBDR range low. Okay, IBDR range high, IBDR range low. Now why this and why this? See, stop hunt up, down we go. Stop hunt up, right? Stop hunt up here. Stop hunt up, down. Stop hunt down, up. So this is our interbank dealing range on the weekly chart, which the bankers don't really use because they focus on the daily chart. Right? But for framing our trades, we look at this, right? So did price do what it had to do? Coming down here, yes. What did it do? It mitigated this, right? Mitigated this particular area over here, and we got a nice displacement up, forming a what? Forming another strong low here. So this strong low over here, price goes below it, and then it snaps above, breaking a high as well. So making this your micro, well, not so much of a micro on the weekly chart, but you get what I mean. So micro, IBDR range high, IBDR range low, and looks like my Bitcoin trade hit take profit. Give me 1 second. Let's just have a look at that immediately. Okay, and then my buy limit got triggered, but the way it's coming down could be a problem. But let's see. Forget about it for now. Okay, weekly chart back here. So over here we have a micro IBDR high and IBDR low. Okay, so what we're expecting now from this reaction from this weekly bullish order block is to go do what? We want to see price go nicely above and take these highs, this high rather, this high, okay, this high. Because what's the nature of this range on the weekly chart? The nature of this range is bullish, right? Because we had a sell side rate first and then a buy side rate here, buy side rate, right? Therefore making the nature of this chart bullish. And we have the same thing over here. We had then a sell side rate here, and then we had a buy side rate over here, and then price dropped because of FOMC for rebalancing purposes. Okay, it dropped for rebalancing purposes. So upon dropping, we consolidated, rightfully so. We consolidated for what? Accumulation of longs. Obviously, now that we see what happened, accumulation of longs, right? So that's all. That's all that we have. So what can we see on the weekly chart? We can see that we have this fair value gap here. Okay, we have the fair value gap over here. This being your premium fair value gap, and this being your I misnamed it again. Okay, we have the discount fair value gap, and we have the premium fair value gap. Sorry about that. So we have the premium fair value gap. Okay, bearish fair value gap, and then we have the bullish part of the fair value gap. So fair value gap low, fair value gap high, where we should anticipate some form of a tradable bounce. Maybe it can be a small short, and then after that small short, we can expect price to make an explosive move up and fill up this gap. Okay, and fill up this gap based on the weekly chart. So we have that on the weekly chart. So just to distinguish that it is a weekly chart, this is for a weekly fair value gap and a weekly fair value gap. So apart from that, we are not bothered about anything because since it's a weekly chart, it will take some time. Okay. And on the daily, okay, the most recent price action to frame out what can happen next week. Okay, now if you look at it, okay, we're not worried about all of that. Just worried about this most recent price action here. You can see that price reacted from there, this order block. Now see, what is this? Can someone tell me what this order block is? Know what this order block is? Yeah. Okay, so we have a propulsion block reaction. So of course, knowing what a propulsion block is, it propels price higher, obviously, right? So that's what. Now, upon propelling price higher, now we're going to focus, bring our attention over here. Upon reacting from the propulsion block, we know that this lower here is strong, right? Because we have a strong low forming inside of a propulsion block. Therefore, sending price all the way up there. Now, on the daily chart, you can see that these wicks over here, right? These wicks over here, they indicate that this portion of price, okay, this portion of price has been balanced, mitigated rather, okay, has been mitigated. The only unmitigated portion of price action is this small part here and this small part over here. Okay, now that goes for something to come over time, right? If the dollar decides to go higher at a over the long run, then this is a point in which price will be the or this is the point that will be the drawn liquidity. So meaning if let's say, for example, from the weekly fair value gap, if Euro USD was going to fall, this is the target. Okay, this is the target. So we have that. So anyways, that's like that's to be dealt with a long time from now. So we can see that price took out this high. Now see what's the importance, right? What's the importance of this high? This high is a stop hunt up, right? Stop hunt up, and see it broke market structure, right? So this range is bearish in nature because you have a buy side rate, then you have a sell side rate, making this bearish in nature when price comes back to premium, which sent price down, right? It sent price down. Therefore, when it breaks this, what's over here? We have a lot of rather buy stops, right? A lot of buy stops. So it's like a protected section of price. And once a protected section of price has been broken, it triggers a lot of counterparty orders and there'll be profit taking and all of that, right? Profit taking and breakout buyers will be induced and all of that. So induced. Therefore, that is why we saw Friday meltdown. Okay, that is why we saw Friday meltdown. I was waiting for that. So on Thursday, I was waiting for that, but I did not consult with the daily time frame. But once I saw that on Friday, it was obvious that Friday was going to go down. Okay, what can we see then? So over here, right over here, we don't see anything. Over here, we don't see anything. Okay, this here, this portion of price action here, this is actually a low resistance liquidity. Right, this is low resistance liquidity. If you look at it from a 4-hour chart, I'll go down and show you low resistance liquidity. But before that, we want to see exactly at what point that Euro USD might want to react from in the coming week, right? In the coming week. So now we understand that this is a stop hunt up and a move down, and then price broke higher. Okay, price broke higher. This here, from this point, right, this particular area here should be, if I'm right, should be reactive. Okay, it should be reactive. So this is an order block. Okay, if I'm right, because I really don't have much experience with this kind of an order block, but if I'm right, this should be a reclaimed order block. Okay, this should be a reclaimed order block if I'm right. And again, I'm telling you straight up, I don't have much experience with working with reclaimed order block. So yeah, okay. And yeah, okay, you're right, yeah. But I'm just looking at it from a daily stance, right? For daily stance, we have this reclaimed order block, and we should be able to come here and see price going higher. Okay, and see price going higher. So let's write that down. M plus OB. So then what's your draw, right? Question is, what is my draw on liquidity? Your draw on liquidity, okay, your draw on liquidity would be the weekly fair value gap, or this entire liquidity void. You want to see price trying to fill it up. Okay, you want to see price at least trying to fill this guy up. Upon filling that up, what's happening? We're taking out a strong high, right? So we go above the weekly fair value gap into it, and what happened? And then we come into this fair value gap, which is your daily fair value gap, right? Now stay with me. This is your daily fair value gap. That should act as, so daily plus FVG, because it's discount with regard to that range. And then we have the weekly one here. So weekly one, I believe it should be slightly above here. Yeah. So this should be sensitive. Sorry, this over here should be sensitive in the sense that it should provide a sizable reaction. Why should it provide a sizable reaction? We are taking a strong high. Okay, we are taking a strong high. Therefore, after taking a strong high, price should push up just a bit more and give us a nice move down. Now, not a, oh no, Bitcoin has stopped. It's fine. Not a big move down, right? But a sizable one. Okay, which you can use to which you can use to frame a nice day trade offer, or maybe multiple trades within a scalp. within the scalping range, right? So you got that. So that would be your drawn liquidity, in my opinion, after price does something like this. Okay, so that's all I got on the on Euro USD. Okay. Now, anyone have any questions? Anyone want me to do anything for them? Well, I majorly cover them only. So if you have any questions, ask me. Till that, let me check this guy over here. What went wrong? No, when I say drawn liquidity, I mean where price should be drawn to, in the sense where price should go towards. Meaning, we know that for a how can I put this? We know that for example, let's say for example, we know that when we have a strong high, right, the drawn liquidity is what? The weak low, right? Something like that. So meaning it's drawn to, now see over here. Now my why did this lose? This loss because my stop was too tight, right? So this stop was too tight. So now what happens here? If I'm right, this is a strong low that got taken out. Okay, strong low that got taken out, which should now lead to a low resistance liquidity run here, 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 here. If I'm right, if I'm wrong, it will just go down and take out stops up until this point. Yeah, right. So yeah. Anyways, the drawn liquidity basically is like it should act like a magnet throughout the week, right? So acting like a magnet throughout the week means it will give you opportunities in that certain direction, right? All right, cool. Okay, anyone else? If taking a stronger high, it's going to have reversal will come continuous trend, because that's you have to study it. That's not something I can tell you, because it that comes with your experience. Yeah, because like if I tell you if a strong high is taken, it's going to be a BMS, then you have to understand, okay, what is the certain signatures in price that tells you that it's a BMS, because over let's say over here, like over here you have the stop hunt, right? And price goes up, and then you have this, and then you have this strong low here, which I just denoted, right? This strong low here, and now price breaks. So now price breaks. If you had no idea about, okay, it needs to take a strong low first and then it's going to go up, then in your mind it would be, okay, this is a break in market structure, therefore I'm going to sell over here. But then if you sell over here, you are just feeding another person's trade, if you get what I mean. Right? Yeah, exactly. So you are just feeding another person's trade by keeping your stop over here. So that makes it even more easier for price to just stab this. Yeah. So that's that. On day meaning you had daily IBDR, no weekly IBDR. What do you mean by on day? Oh, on dollar index. I had no daily IBDR, weekly IBDR. Yeah, because it's not necessary, because we just want to look at the drawn liquidity on dollar index, right? Obviously, anyone can see that this is a low and this is a high, right? Or this is your daily IBDR low, and your daily IBDR high is over here, right? But from a fractal standpoint, this is your IBDR low, this is your IBDR high. Okay, so think of it like that. But looking at this here, did I miss a lot? I'm almost done with the forecasting. After that, it's Q&A time. So I don't think you missed a lot. You can just watch the forecast at any time, right? So over here, daily IBDR high. Sorry, stop. My bad. Stop hunt up and price drops down, right? So we have buy side rate, sell side rate. What does that mean? This range is predetermined to go down, predisposed rather to go down. So it went down. Now it's time to go lower. In my opinion, it's time to go lower. Or it can come up to this particular point and go higher into a further premium, right? So yeah, so this is my daily IBDR high, daily IBDR low. Nothing much to it. I'm just framing it out based on what's happening right now. But like I said earlier, or like I said yesterday, we don't care about getting the entire range, right? If you think about catching the entire range, you're not thinking properly. Okay. Yeah. So what was I saying? Okay. So yeah. So this is the one for the dollar index. Uh, Euro USD. This is the one. Okay. So if Euro USD is going down to the reclaimed order block, that means dollar index should go up to what? Redeliver, rebalance, at least the start or the end of it. Okay. And if dollar index goes to redeliver, rebalance, and reacts, then obviously we know that Euro USD is going to come to the reclaimed order block and boom, go up. Okay. GA, let's have a look. Okay. Right. So GA weekly chart. What do we see? We see price making a strong low, confirming that strong low, and going higher. And see what it did. It took out another strong low here, triggering a low resistance run up, which was pretty nice. Then, if this trigger a low resistance up, low resistance move up, then of course this is a protected low. Now, what happens when the protected low is taken out? Here, it triggers another low resistance move, right? At least for that, at least for the coming few weeks. So for 1, 2, 3, 4, 5, 6, 7, for 7 weeks, you had the opportunity to boom take part in GA nicely all the way up. But then coming to today, not today, the recent price action, we had this strong low. What did price do? Take it out. So after it takes it out, obviously the move is up, taking out this one and trying to go to this one, order block over here. Okay? We try to go to the order block over here, or at the very least the volume imbalance over here, right? So did you try selling GA, or you try buying? Selling. Ah, that's why. Okay, so when you sell, you are essentially feeding into the against the narrative rather, right? Yeah, a lot of people sell GA and EA. Okay, so volume imbalance and order block here. Then coming to the daily chart, of course, the daily chart is just going to show an up move because of the low resistance move up. So now you see what has happened, right? This entire move up, what is it doing? So much of generated liquidity. So when price actually goes to a point of interest and starts dropping, you then have that opportunity to capture like 1,800 something pips, right? Just I don't know if you all will hold that, but you have that opportunity, right? So buying last week, right? Buying last week was, I say, not that much of a good idea because there was no zero, what do you call, zero narrative. There was no narrative to support a sell. Sorry, yeah, there was no narrative to support a sell, right? So if you go to the 4 hour chart, there were setups for a buy, not a sell. Okay, if you go to the 4 hour chart, uh, uh, when was Monday? Can someone tell me what day was Monday? Let me just have a look soon. Uh, Unless, of course, someone can tell me. Okay, 26th. Okay, 26th. Yeah, 26th is here, right? So now on the 26th, looking at what happened the previous week, what do we have? We have consolidation. And in this consolidation, what happened? We have this equal lows, price took it out, and then slowly went higher, right? Slowly went higher. Now, on going higher, what did it do? It created this strong low. In creating this strong low, it confirmed that it was a strong low over here. Right now, this is a 4 hour chart. So in the 4 hour chart, we know it's very hard for, just because the strong low has formed, it doesn't mean it has to come down and then go up because it's a 4 hour chart, right? So when you confirm the strong low, then your mind should have been, okay, I should be going for a buy because we know that a weak high also is going to be created at a PD array. So on the 4-hour chart, there was no PD array until that volume imbalance, and then volume imbalance came around somewhere here, right? So meaning you should have been able to buy around here and take profit somewhere here. Okay, so there was no selling in terms of capturing the bigger range, but there was selling to capture small ranges. So if you were to go to the put a line first, line over 26th. Yeah. Okay. 26 Monday. Okay, don't need this anymore. So on Monday, what's the narrative now on the weekly chart? Narrative is buy. What do we have here? We have a low. Is this a protected low? Yes. Stop hunt, down, up. So this order block is protected, right? Now what's this? Short-term low, which is strong, breaks market structure here, confirming that it's a strong low, and price drops. Therefore, we buy over here knowing that it's going to take out this range high. Okay, it's going to take out this range high quite easily, and it did that here. That's Monday. Then Tuesday, you're still focusing on buying. Okay, you're still focusing on buying because you took the range high, you formed another strong low over here, right? And now this is your weak high. Weak high. Okay. Now this liquidity void here, right? Liquidity void essentially they are factors or they are signatures of low resistance liquidity runs, right? So if this low led to a low resistance liquidity run up, what does that make this low? A strong low. So what happens here? Price takes out this strong low. Okay, price takes out this strong low and reacts at redelivered rebalance higher. That's Tuesday. Buy and hold because chances are on Tuesday or if chances are on Monday, if Monday formed the low of the week, which should have been obvious by the start, the triggering of the low resistance liquidity run. Tuesday you should have bought and you should have held until Friday. Okay, you should have held until Friday because this move was imminent. It was imminent. Okay, based on the weekly time frame. So that's Tuesday. Then Wednesday. Wednesday I don't see anything that would be of great use apart from this spike. Okay, apart from this spike, because if you look at what's happening here at London Open, price just went up, right? If it went up like this, and if you can see this signature over here, stop hunt down, up, comes back down, providing you the buy, and you have a nice move up, right? You have a nice move up, and so with this nice move up, obviously you're going to either take profits here or you will take partials and let the rest run. Okay, but over here, right, you have a stop hunt here and price spikes up, right? Price spikes up and it goes down. What's this? This break of this low. This break of this low supports this strong high. Why is this a strong high? This is a strong high because you have a stop hunt and you have a break, right? You have a stop hunt and you have a break. Now when you have a stop hunt and you have a break, this high becomes strong. Okay, this high becomes strong. Then what happens when this spike takes out this high? If you have quick fingers, sell. That's what I would have done if I'd seen it. That's what I would have done. I would have sold. I would have sold to take out what? Take out signatures of low resistance liquidity. It can be this one. It can be this one. It can be this one. Okay? Because once a strong low has served its purpose, it's useless. Ah, that's good. That's good. That's good. Yeah. So that this sell was good. Yeah. So, but did you lose this sell? That's the problem. Yeah? You want to see it go low, right? We have to be happy with the range itself. That's the thing. We have to be happy with the range itself. If you once you understand that trading within the range is what's profitable, then money will just flow in. Okay. Over here. Okay. So yeah. So same thing. So you just want to take this low. Whoever annotated over here, you just want to take this low or this low, and you just want to be done with it. Okay. Then we have What is this? Context. The context for this price run up was this was a strong low. Okay, this was a strong low for this price run up. So then when you see price trading through it, what does that mean? It means that it's going to immediately seek a PD array and go the other direction. So where's the PD array? Let's see. Here, fair value gap. Okay, fair value gap. And since this is the 15-minute chart, on the 5-minute chart, there should have been something over here to support that. Okay, so for now, let's look at it as mean threshold from here to here, mean threshold here. Okay, here's a mean threshold, which was enough to frame the buy up until what point? What's your low resistance liquidity run? Your low resistance liquidity run is this. But why not this? This has no signature of low resistance liquidity. Okay, so you want to target this one and you want to be done. You buy over here, or you buy after confirmation and you want to be done over here. Or if you want to see if you can capture the entire move, you take out 80% here or 50%, whichever one you like, and let the rest run. Okay, so that's Wednesday, right? Yeah, Wednesday. Then Tuesday, sorry, how can I go back? Thursday, what happened? This was a strong high, right? Now why is it a strong high? Formation of this led to the break here. Formation of this led to the break over here. Therefore, price going above here triggers a low resistance liquidity run down inside the range. Okay, triggers a low resistance liquidity run down inside the range. So what's the obvious target? Here. Why not below this? Because this clearly has signatures of low resistance liquidity, right? Why not below this? That's because this was Thursday, right? Thursday and Friday, right? Either by Thursday or Friday, it caps the range, meaning you won't see much movement. Okay, that's the importance of time and then price. You see how it stayed literally inside one range, and on Friday it just went slightly above, but no different than this range, and it just stopped there, right? So on Thursday and on Friday, you can participate in trades, but you want to limit those trades in terms of their take profit. Okay, so that's basically how you read it, right? You have the higher time frame premise in mind. What's the premise is the drawn liquidity on the weekly, daily, or 4 hour. Okay, weekly, daily, or 4 hour, and you act based on that. You act based on the drawn liquidity. Okay, once you know the drawn liquidity, then of course it becomes very easy, right? So that's my take on this one. So what about anyone else? Anyone else has anything to say or want to ask anything, or others we can end the session. So anyone that wants to ask me anything regarding any part of mentorship, you can ask me, and I'm gonna take a bite of something, so don't mind the crunch. So someone asked me anything, right? If not, yeah. Okay, wait, one by one. I'm having some nachos. GJ, okay. All right, hold up. Um, GJ, yeah. You want GJ analysis or GJ run through of this week? Ja, Ja, right? Yeah. Do you want a GJ analysis or the run through of what happened this week? Analysis. Oh, okay. So forecast, right? Okay. Okay. Hold up. This is so good, man. Okay. Hmm. Okay. So weekly. Oh, looks like I've done it before. Okay, so weekly IBDR low, IBDR high, premium discount. Okay, I don't know what this is. Let me take it out. Right, so over here, price just pierced through this low. Is this low strong? Yes, it is. Okay, this low is strong. So because it led to a low resistance move up, right? So taking out this low means that we are going to have a low resistance move up into premium. Okay, that's all. Low resistance move up into premium, and so far it's reacting from this portion of the order block. Okay, so if you go to the daily, and before I forget, I think I see something. Oh no, I don't. Okay, so daily, on the daily, we have this order block, we have this high. Okay, this order block, this high. Now what's happening is we are seeing low resistance liquidity forming. Is it safe to say that we determine strong low and strong high simply by drawn liquidity? It's much more complex than that. It's not that simple because price can just form a strong low or strong high, and it will just trade within that, and it will just trade within that until there's some form of a news catalyst, right? So it doesn't matter on whether there is a drawn liquidity, because every day we know that price is going to have a buy day, it's going to be a sell day, it's going to be a consolidation day. So when it's a buy day, it will act based on a bullish IBDR, bullish interbank dealing range. But then when we have a sell day, it would be what do you call it? It would be a bearish IBDR, right? So you have to think about it like that, right? Yes, we have a drawn liquidity, but I will get back to you on that one once I go back to Euro USD to prove the point. Yeah. Mm, this one, high, high. What's this? Relative equal highs. What's above? All block. But more importantly, we have this all block. This all block. Okay. So we have this OB here, and we have this order block here. Okay, we have this order block here, and seems like price is reacting from it. So looking at GBP JPY, I would say it should find continuation up higher from here, just mainly because of the fact that this is too clean. Okay, this is too clean. Then we have a strong high here, right? So in order to trigger a move down, you want to see it trade through the strong high into the order block and then have a bearish day, or maybe a couple of bearish days. Okay, that's what you want to see. So that's on the daily chart. So what does this IBDR range look like? We have buy side rate, sell side rate. So what's the nature of this? Bearish. So what's the bearish PD array or premium array? Bearish order block. Okay, bearish order block inside of a strong high, weak. So if you're going to be taking a sell, you want to take a sell here. I'm not saying I'm not telling you to take a sell here. If it was me, I would take a sell here, and I would take it, and I would take profits all the way here. Obviously, taking partials along the way. Okay, taking partials along the way. That's my take on GBP JPY. Up before it goes down. Okay, up before it goes down. Uh, Next up, can you show me an example of strong low or high? This is an example of a strong high. This over here is an example of a strong high, yeah? And so essentially it goes like this: buy side rate and sell side rate. Now the sell side rate doesn't mean that it's a rate of this sell side, it's a rate of something else, or something like this, right? Something like this. Then price will go back to premium and sell off from premium. That's a strong high. Then a strong low is sell side rate, buy side rate. Okay, buy side rate, and price drops into discount, reacts from discount and goes higher. Okay,
So the point of the strong low would be like the very bottom would be like a horizontal line. You would say that's the actual strong low.
I'm sorry, come again.
Like this right here would be the classified as the strong low.
Yeah, that would be the strong low. Yeah.
Thank you.
No
Appreciate
problem.
it. Appreciate
No
it.
problem. No problem.
What about like a week? What about like a week low, week high? Like
The week low, week high. Okay, so let me draw it again. So when you have a scenario like this here, and then a scenario like this here, this is your strong low, and this is your weak high. This is your strong high, and this is your weak low. That's all. So
gotcha.
yeah,
Because the strong end pulled liquidity.
yep, correct.
Thank you. Thank you. I really appreciate it.
No problem. No problem. Okay. So the next one is Nacho Man. Oh, have we read that? Okay. US 500. US 500. Okay. Oh, looks like that day my trade thing, my observations went well. It went to target almost immediately. So that's nice to see. Yes, that was nice to see. And it went all the way up here, which was relatively equal highs. Nice, nice, nice. Okay. Delete. Right. So it's pointless looking at the weekly chart for indices. It only goes in one way. Only one. It's only it's going to go to the moon until something else happens to the U.S. economy, and then it shoots all the way down. Right. So far there is something on the way, but we just don't know when. Right. Uh, that daily. What can we see? We have stop hunt down, up, making this your strong low, right? Strong low. Mm, and for now, this is your high. Okay, your high here. So essentially, this is your interbank dealing range low. This is your interbank dealing range high. Okay, interbank dealing range low, interbank dealing range high, and looking at premium discount, it's massive, right? So the bigger the interbank dealing range gets, the more points of interest that you'll find, right? So then it becomes a matter of all of this different dealing ranges, because when it comes to indices, right, indices trading, they trade based on stops. In a sense, they only want to hunt stops, right? So in hunting stops, strong highs, strong lows, they can easily get taken out, which would then trigger low resistance liquidity runs. Because as you can see, there's more bullish runs than bearish runs, right? Because there's very little strong highs, but there's a lot of strong lows. So when strong lows get taken out, it triggers a bullish run to the upside. So here, strong low taken out and bullish run, right? Bullish run. Then strong low taken out, bullish run, right? So when you're looking at indices, this form of trading or this form of analysis is useless. Okay, there are certain way in which you should trade indices, and it's based on the AM trend and the PM trend US time, right? I have a separate teaching for that, and it's not mine actually. It's completely ICT is what I learned from him. So you have how can I put this? You have the AM trend and the PM trend, right? So AM trend starts with NYSE open. So we have 9:30 EST, AM EST to 10:30. That's your opening range, right? So inside of this time period, just like you have London open Q zone, New York open Q zone, this is New York Stock Exchange open Q zone, if you say something like that. Okay, so the high or low of the day should be formed inside of this range, time period rather. Okay, the high or low of the day for the index should be formed inside of this time period, and the true day open is 9:30 a.m. It's not 12 o'clock, it's not 7 o'clock, it's 9:30 a.m. Okay, this is your true day open for indices, and you want to operate between 9:30 a.m. okay to 12 p.m. Then from 12 p.m. to 1 p.m. you have lunch break. So call this a gap here, lunch break. And then from the lunch break, 1 p.m. you have trading from 1 p.m. to 4 p.m. It's actually three, but a true day close or true day open, true day close. Yeah, true day close ends at 4 p.m. But at 3 p.m. you want to get out of your positions because as we approach 4 p.m. the volatility dies down. Okay, and the spreads get wider, if I remember right. Okay, so you want to do something between 9:30 and 12 p.m. or 1 p.m. to 4 p.m. Given that this is the time period in which it moves more, there's more movement. Okay, more movement. Now, trading indices is very technical. There are various different things that must come together. Okay, there are various different things that must come together when you trade indices. For example, your 4-hour PD arrays are very important. Then your divergence between US 500, US 30, and US what's the other one? US 100. That needs to be divergence, bullish divergence or oh my god, bullish divergence or bearish divergence, right? That will tell you whether that will tell you whether it's a buy in this period of time or it's a buy in this period of time, or whether it's a sell over here or whether it's a sell over here, right? Based on the divergence. So you have two possible trades, okay, when you're trading indices. One obviously in between 9:30 a.m. to 12 p.m. and the other one between 1 p.m. to 4 p.m. based on these divergences. Okay, now there will also be times in which you get one directional moves. Now the one directional moves will occur only when the lower high of the day is formed on a PD array on a higher time frame, 4 hour or daily, inside of this time period. Okay, it needs to form inside this time period, otherwise you will see up moves and then a big down move. So the indices, they're deadly if you don't know what you're doing, because you might think it's going to go in one direction and then down you go. An example. Okay. Uh, I must find the date. 29th, 30th. Okay. Yeah, so here you go. Find 9:30. This is your opening range. Call it OR because there's no space. Oh, it's small, so there is space. Okay, opening range. Oh well, yeah, opening range at 10:30. Then from 9:30 to 12 is your AM trend. Price will tend to make a one directional move between this time. And then you have the lunch break, 12 p.m. to 1 p.m. Then from 1 p.m. onwards to 4 p.m. is your PM trend. Opening range is here. What did price do? Just before the opening range, actually, price came off of a 4-hour bullish order block. Therefore, this bias has been set for the time period of indices trading as bullish, right? As bullish. So over here, you are confident to buy. So at this point, this is your range, this low to this high, right? This is your range of reference, or you can see your interbank dealers range from this low to this high. We're only worried about the 9:30 time period, this low to this high. So discount of this low, what do you have? Bullish order block. So now let's take this out. We have bullish order block here. That's what is going to reference here. So just before 9:30, it formed the low of the day. It's fine if it varies just 50 minutes before, 50 minutes after, but it formed the low of the day here. It also formed the high of the day here inside of 9:30 to 10:30, which gave you the range to work with it. So you can buy and you have to take profits immediately. Okay, you want to take profits immediately at the most obvious liquidity pool. So here, because remember I said indices traders, they look for stops. So where are the stops? Here. So take profit here. When price comes back to your order block, you buy, take profits here. Okay, it's a quick thing. When you're dealing with indices, it moves very quickly, right? London and the first half of New York, useless. First half of New York is useful for providing you context, but it's useless for trading because NYSE Open tends to be so volatile that it could, even if it was predisposed to go higher, it could just as easily take you out and then go higher. That's how it moves. Okay, that's how it moves. So when you look at indices trading, just have a look at that. And I believe there is a video in the Telegram group. If there is no video on the Telegram group, we can do another lesson on it, maybe in the coming sessions, maybe next week or something. Okay, so. GBP USD. See, remember I told you guys this in that video that day. See, it came to target, right? So, what does that tell you? That we have the same analysis for GB for Euro USD. We apply to GBP USD also, but they tend to move in the same direction, but by different amounts, right? So, from based on our forecast from last week, our target for GBP USD was here. It came exactly that, right? Now we have a strong low, right? Strong low. We need to see price trading somewhere. So in terms of GBP USD, what do we have? We have this bullish order block here, right? We have bullish order block over here for price to trade to, right? Price to trade to. But then if you look at the weekly chart, right? If you look at the weekly chart, what do you have? Bullish order block here. So let's draw it out. Go back to daily. It's here. Okay, so basically the same thing here. Here you go. Okay, so this is your bullish order block, or I would use this as my point of interest if I'm going to be doing anything on GBP USD, but I won't because I like Euro USD and gold. So yeah. So in terms of the draw on liquidity, right? So I would say first this, after this, probably the fair value gap here. Fair value gap, and is this a breaker? Yeah, it's a breaker. So a break also. Okay, so the breaker as well, right? So that would be my drawn liquidity after it goes down and then goes higher, right? Okay, guys, give me 1 second, yeah, 1 second. All right. So that's that. That's that. Then next up is gold. Oh snap! It's a lot. Okay. Weekly chart, I have no opinion of it because we have this big fair value gap, and we have taken, and then we have taken this low here. Bro, chill. We have taken this low over here, and price is going up, right? So, what are we looking for? We are looking for low resistance liquidity run up. Okay, low resistance liquidity run up. So that's that on the weekly. It's a bit messy right now. Bear with me. Uh, and remember last week, right? Remember last week when you have a drawn liquidity that lines up with premium or discount array, yes. Is that yeah, of course. That that is your drawn liquidity. Your drawn liquidity is a PD array because price moves from PD array to PD array. Okay. Uh, right. Interbank yield range high. The bank yield range low. Low taken out doesn't matter anymore. I don't know what this is. I don't know what that is. Oh, these are all from last week, so let that go. Okay. Gold goes up. Remember, smaller range, bearish bias. So what do we want price to do? We want price to go to premium and then sell off, right? So it sold off. What do we have here? Strong high, weak low, right? Strong high, weak low. So gold should see it drop below, come here, and then go high. So in terms of gold, if as long as Euro USD, right, as long as Euro USD doesn't reach redeliver rebalance on Monday or Tuesday, then there's a chance for gold to drop here and go high. So gold, I would be bearish in a way, right? But it is subject to change depending on what happens because Mr. Gold, when he moves a lot and he tends to invalidate a ton of things, right? So you need to think about gold on a case by case basis and on a daily basis, right? So that's my view on gold. I would say look at it by yourself in terms of of course, consult in the group and ask questions. I will send you my view as well as to what's happening on that particular day. I have no long-term view on gold. I just want to trade it up and down because the pip count is nice. Okay, that's all for gold. But doesn't change the fact that bearish range and overall it's a bullish range. Oh God, this guy won. Okay. Mm, good day. Can you please look at XAG USD? Do I have it over here? And I must say, look at DAX also, right? So let me look at the DAX first. DAX is this, right? I really don't trade it. Can you confirm? Is this DAX? Someone asked me DAX, right? Or do I skip it?
No, that is DAX. You're right.
All right. Weak high. Mini IBDR low. Strong low. How? Stop hunt. Move up. And now it dropped. Break of structure. Making this temporarily bearish, right? And remember, Eric, I sent you a video on this, right? As this being your point of interest temporarily, if I remember right. I sent you this.
Yes,
Yeah.
exactly. Yep.
See how it traded off nicely. But you see, even though it traded off nicely, it did not give you the massive displacement, right? Like I said.
Right,
So,
right. Yeah, I caught that sell, but I'm just curious about it now.
so let me go to the 4 hour. Right. So here you can see now we have a strong high form, stop hunt up and down. Now this obviously what's the difference between stop run and a breakout structure? That's confusing. Breakout structure is when you are working within an IBDR and it starts to slowly break higher. For example, we have a bearish IBDR and it starts to slowly break structure going higher into a PD array, right? As opposed to a stop run, which is essentially the creation of a range. Stop run is a creation of a range. So you have this here, up. Now over here you are thinking this is a break in market structure, therefore I'm going to buy. Okay, that's what you think. I'm going to buy because it broke market structure. But what's this? Bearish order block. You're dead, right? This here is a break in market structure. This is a stop hunt. This is the break in market structure. Okay, stop hunt comes first, market structure comes second. Stop hunt indicates institutional order flow. Market structure confirms institutional order flow. Okay. Yeah, I believe it's in June videos. Yeah, and July also. Okay, so we have that, and then this is go to current day. Okay, now current day, we have this bullish order block here. Now this was a low the price took into a PD array, and what happened? Price went even below this low. Now what does that mean? Question is, what does this mean? Let's check if this bullish order block here is a strong low. If it is a strong low, then that of course warrants a stop hunt below this low, and then price will go higher to take out this high. Okay, think about it. Go higher and take out this high here, this high and this high. Now see, let's say 15 minutes. Is that a strong low on the 15-minute? Let me first highlight it. Up, right? Look at the 5-minute. Stop hunt, up. This is now what? A strong low. Okay, strong low. Now we change the narrative up here and bring this low here, right? Now when we bring this low here and we go back to the 4-hour, you see, it took out that strong low. Strong low taken. What does it do then? It triggers a low resistance liquidity run. To what? At this point over here, right? Over here, what's your what's your dealing range? This high, this low. Where's your low resistance liquidity? Here. So how can you frame a trade over here? You get a buy somewhere here, or maybe over here in the next candle. Target is here, right? So if you, and now that we saw what happened, let's just pretend we didn't see what happened, right? Okay, so go here and there, right? So it's no coincidence that it takes this only out and drops. No coincidence that it just takes this and just drops, right? It wants this. This is the lowest. This is low resistant. It wants it, but this here, like you guys learned yesterday, this here is highly resistant. Meaning, if price were to come back inside this particular portion, it's going to get rejected. Therefore, rejection. Okay, and then price comes lower. Now, as a result of this, what do you call it? As a result of this portion of price action, right? As a result of this portion of price action, what has it formed as a result? Strong low, weak high. Okay, strong low, weak high. Okay, now Sean, but now Sean, you said that no, this is a strong high and this is a weak low. Yeah, but context is key, right? Context is key. We are in a range. Okay, we are in a range that's predisposed to do what? To go higher. Therefore, for all we care, or for all that we know, price should at least try to come here inside this consolidation to mitigate this portion here, right? So what is the algorithm, or what is the liquidity that price is going to seek? Buy side liquidity. So this high, this high, this high, and potentially this high, since it's a weak high already, right? It's a weak high already. Now see what is formed. Low resistance. Now you have stops here, you have stops here, you also have stops here. And price made a big rejection, trying to go higher. Okay, and go higher. And then the next possible thing that you can see is price will just trade above this and go higher. Okay, trade above this and go higher. But if I am wrong, if I am wrong and this is still a weak low, you will see price melt until this point and then shoot all the way up. If I'm wrong about this point, this portion here, right? But in terms of context and narrative, I believe that price should, react from this particular area here.
So
Right?
you don't think this is a low resistance liquidity run right here that it might want to target before the shoot up?
For price to take out low resistance liquidity run, for price to actually go on a low resistance liquidity run, what should it do? It should take out a strong high. Where is a strong high over here? Yeah. So it has to go above that first. That's what I'm thinking.
Okay, so here to this to there.
Yeah, exactly.
Okay.
Yeah.
Yeah, because I caught this sell, but this hold up right here, I thought this was gonna get taken out pretty. Yeah. Okay, that's good context. Thank you.
Yeah, no problem. Okay. Well. How do you know when the market switches to a new structure? To be honest, it's automatic with me. I've seen it so much. I know when to be bullish. I know when to be bearish. Right? Remember when I asked you to study the breaks in the highs and lows? Nah, that should help you. That's the study that should help you, right? So do it again. Do it again. Study the highs and lows, the breaks and all that, and look at the reaction, and then you see what happened after that. Then only it will automatically come to you. That me, the concept of me telling you how I know when market structure changes, it's hard for me to articulate that because it just comes naturally to me. When I look at the charts, I look at it, my mind goes through a series of steps. Okay, this has happened, that has happened, therefore I'm bullish. Okay, therefore I'm bullish. But it is central to this. 1, 2, 3. 1, 2, 3. Institutional swing points, right? I'm so used to seeing it that once I see it, it's okay, I'm bullish. Okay, I'm bearish. Something like that. Right? So I can't really explain it in a way. Higher low becomes weak when liquidity is taken and all of created after. Higher low becomes weak when liquidity is taken, yes, and all block, yes, correct, yeah, in a way, yes, you're right, yeah. Okay, the creation of a weak high or low is the product of a run on what? Strong high or a strong low. When you treat it like a science, it will come to you nicely. Okay, anyone else got anything to ask me? Or is everyone good? And I think there was nothing off record today, right? So
Yeah, actually, can you talk about inducement at all off record?
inducement.
I missed those sessions because I came really late in July.
Do you think we can do inducement
One-on-one?
this coming Friday?
Sure.
Because if I talk about inducement, it's going to take it. I would have to, number one, I have to start early because it's going to be talking about all of these with so much of example. It will take more than 1 hour.
Okay.
Yeah, it takes a lot of time. That's right. Because the first time I spoke about this, it took me 3 days.
Okay. All right. That's fine.
Okay.
Yeah. Thank you.
Okay. Whoa, hold up. High low become weak. Okay, I said something about that. For low resistance trigger, strong has to be taken. Okay, yes. I thought when a low gets run out on liquidity and price moves up creating order block, that's a strong low. When a low gets run out, okay, on liquidity and price moves up creating order block, that becomes a strong low. Yeah, that's correct. That's when a strong low gets taken out, that means liquidity is run. And then price moves up, it creates this thing, strong low. Yeah. Can you go off your course now yesterday? Why did I go through yesterday? Ah, yes. Ah, okay. All right. High resistance trigger, strong low has to be taken. For high resistance to trigger, strong low has to be taken. No, for low resistance to be triggered, only strong low or strong high must be taken. You all should have gleaned something from yesterday, right? When I spoke about high resistance, I spoke about that breaker thing for a reason, because breakers are high resistance liquidity runs. Okay, so you want to go through a quick review of yesterday's stuff? Okay. Okay. Okay, stopping the recording. Bye-bye.